to my channel. Today we shall be discussing consumer price index. Consumer price index. Okay, now in a few hours the Fed of the United States of America will be publishing consumer price index numbers for the month of May. Of course, traders actually look out to these numbers to some level of volatility, because numbers like this, when published, tend to trigger some level of volatility, some level of buying and selling activity in the market. So as a trader, you want to position well in the market such that you're going in with the idea of making money and retaining your profit. Okay, now what's consumer price index? Consumer price index simply means of course they say CPI, so it's a weighted measure or weighted average of a basket of goods and services, be it the transportation, be it food, and be it healthcare sector. So those pricing changes are weighted and the average taken over the course of the month, and that score is being published as the consumer price index. Okay, so how these prices change within the month is something that gives the monetary policy makers some level of hint as to what inflation is all about in the country within that specified time. So the Fed, the organization in the US that is saddled with the responsibility of engaging monetary policies that will stimulate the economy, have always relied on the consumer price index as a measure of inflation majorly. So tomorrow's figures tend to tell us how inflation has fared in the US. Just to tell you once again that, remind us once again that last 2 years, precisely 4th of May 2022, the Fed in the US embarked on what we call quantitative tightening as a monetary policy that looks to reduce inflationary pressure. At that time, inflation actually hit an all-time record high of 9.1%, and to the authorities there, it wasn't so sustainable, and they have embarked on quantitative tightening. And quantitative tightening simply means trying to pull out liquidity, trying to take out monies from circulation. And what does that do? It tries to reduce people's spending and get people to save more, and in turn it helps put a downward pressure on inflation. Now that's on one hand. Now on the other hand, quantitative easing is another monetary technique, just opposite of quantitative tightening. Here, any economy that is passing through some level of economic stagnation or some deflationary pressure will tend to see quantitative easing as a monetary policy to try to stimulate the economy and try to get people to spend more. So just like we have in the quantitative tightening, trying to get people to save more rather than spending, quantitative easing encourage people to borrow and spend so that they use that opportunity to stimulate the economy. So that has been the case of the authorities in Japan, and that has allowed them to keep their interest rates for decades as low as 0%. So you're going to borrow, you're going to lend money in Japan, you're almost not going to pay an interest on that loan. Unlike most countries in the West, the US, Canada, Australia, UK, everyone have been increasing interest rates. Currently, interest rates in the US stands at 5.25%, unlike their Japanese counterpart that currently stands about 0.10%. And that tells you that there is some level of monetary policy differential between both authorities. Okay, there's some very monetary policy differential between both authorities. Now in the US, you're having inflation, while in Japan, inflation is to the barest minimum. And what does that result to? Of course, CPI number. So if you've got more inflation, the higher the CPI number, the higher the inflationary pressure. And what does this? How does this affect the local currency? Of course, that boosts the local currency. So in the US dollar had witnessed some level of strength, some sustained strength, because of this inflationary pressure and the fact that the Fed had consistently hiked interest rates. Recently, they have put a pause on hiking interest rate, and they decided to leave interest rates at 5.25, and that has still seen the dollar dominate. The dollar keep being stronger by the day. Now, how has that affected the yen? The yen has witnessed some level of sell-off. People tend to ditch the yen because it's no longer of any value, because deflationary pressure hasn't helped the yen either. That's exactly why the yen has weakened for over time. And if you look at the chart, for every of those currencies whose central bankers have maintained and increased interest rates, you find out that there is this level of bullishness when trading against the Japanese yen. Take for example the USD JPY. The USD JPY has witnessed a substantial surge because people are buying the USD and selling the yen. Same applies to CAD JPY. People selling the investors selling the Japanese yen and buying the Canadian dollar. Same applies to Australian dollar JPY pair, New Zealand dollar JPY pair. So generally, it's been a sell-off for the Japanese yen. It's been a sell-off for the Japanese yen. So why is tomorrow's numbers very important? If just like we have on your screen, you have the previous CPI report. You also have the actual, just like I said, and you also have the forecast report. As a fundamental trader, you look at your Forex factory and you expect the CPI release by 8:30 tomorrow, and you find out that the actual report is far greater than the expected or the forecasted CPI numbers. Then it tells you that inflationary pressure still persists in the US. That means you're having inflation going up again, once again, regardless of the tightening policies of the Fed. And what happens, just like I said before, once inflation goes up, it strengthens the currency. So there's this direct relationship between inflation and the local currency. So if the CPI numbers go up tomorrow, expect the USD to strengthen. And if it falls tomorrow, falls lower than the expected value of the CPI, then you expect some level of sell-off in the USD. So just to give you a heads up, USD JPY, you want to be bullish if and only if the CPI numbers tomorrow comes out in the green. That is, they become greater or higher than the anticipated numbers, just like we have on your screen. So that's exactly what we have for you today. So trade with caution, be very careful, make sure to engage proper risk management in your trades, and I hope you have fun tomorrow, have a very profitable trade tomorrow. Until then, do well to like our videos, share, and you can also follow us on YouTube at Krystal Traders Hub. There we share our own insights as to the happenings around the Forex world. Until then, have a good evening. Bye.